to check how much this price moves. Is it moving? I'll count 15 in my head. Has it moved 10 to 15 cents in 15 seconds? Because if it isn't, it's really going too slow for that scalp and recoil. This is a really good, obviously people use it to see the amount of orders coming up the pike, but the problem is that we're only seeing about 40% of the actual orders. And to move a large cap or a mega cap stock, this would have to be like, 5 digits here, to make it really spoof it or try to control it. So unfortunately, you don't see the mega drops, the big algorithm drops. They're all hidden, and then all of a sudden the price action will boom, but you won't see it. And they don't. I'm not even going to go into the whole thing about how they're supposed to report and all that stuff, because it's just not really true. Supposed to and doing are two different things. Down here is a 15-minute chart. Now this has the market pulse on it. What is that? This basically tells you what direction on a 15-minute chart the QQQ, the SPY, the TLT, the UVXY are going, which kind of gives you the breadth of the market all in one. So I have that on a 15-minute chart, and I also have it on a 5-minute chart so you can see it faster range. This is just darked out because the market's closed, but normally all 4 would be there. And then over here, I didn't go into, this is the multi-chart alignment. All these, you see 5-minute, the M stands for minute, 15-minute, 30-minute, and then somewhere on here you'll see like an hour, or there's 15-minute again. Did I pass the hour? Yeah, there's the 1 hour. And then there's a 4 hour somewhere, but it'll be hard to find it because this is a 1-minute chart. But anyway, why would these be up here? I'm sorry, I'm a math teacher, so I always talk like there's a classroom in front of me. Hey, why would these be up here? Can you please answer? It's very quiet in the audience today. Basically, you want to know when this price action is getting to that 1 hour candle, right? You want to know how many people are deciding on the 1 hour candle, 4 hour, 30-minute, 15-minute, and 5-minute. More people take their trades on the larger time increments. So you're going to want to know when that is. So you can sit here when you can lose perspective on a 1-minute chart. You can get really caught up in the micro. And this kind of makes you step back and look like, particularly on a 5-minute, like what's happening on a 5-minute chart, because that's all they're seeing. They're not seeing this little action in between. They're just seeing what's happening on their 5-minute chart over here. So, that's why it's so important to really know when it's about to come, because you want to trade with the crowd. You want to trade when the multi-chart alignment, as the candlesticks are coming over. You want to know when they're all about to see something, because a lot of trades might happen right at that moment and more happen at the larger time increments. So again, this is why this information is what a lot of traders don't know anything about, and why they're just really rolling the dice. The more information you have like this, the more you can absolutely predict future price action, because that's all you don't get anything that shows you what's going to happen in the future. You have to predict it. So you need the tools to predict it, right? Like this risk range oscillator up here. It's taking the last 9 candles. It's showing you how much they moved in that direction, smoothed out, whether they close green or red, and then it gives you an average target to go for. So in this case, in 1 minute, you don't have a very big. Well, right now we're on closed market. That's why it's so low like that. But normally Tesla would be way higher. But yeah, it'll show you the range to go for, so that once you get into it, you're, just get out, hop out when you get near that range. Just don't get greedy, and then go for the next trade. That's scalping. That's not day trading. Day trading, you stick in for a bigger move. Scalping, you're in for like in 1 minute, 2 minute, 30 seconds, 15 seconds. So this is really helpful for scalpers, and that's what the prop firm people are. So that's what this is designed for. Then down here is the Scalp Pro meter. This is giving you overall volume for the day. This is the last candle. This is the current. If the current candle, again, we're in a closed market. That's why it's so low for Tesla. If the current candle turns blue, you hear a little ding. That means it's gone past the last candle, which means there is a move in that direction, whatever direction the candle's moving. If it was like, if you saw that thing ding and it was going up, then you'd know, like, hey, a lot of people are starting to go long. So you jump on, I antiquate it to like you're on on a swell waiting for the wave to crest on your surfboard. And then you see that, you hear that ding, you see that more people are there, you see the wave coming, and then you jump on it and you ride it for a short period of time, perhaps the length of the risk oscillator, or you look at other indicators. You get better and better at seeing what's about to happen, and then you get off and you take your trade. And then this is telling you inside, like, what is the percentage? Like right now at the pre-market, everything was 100% selling, and this is a little meter showing you the strength of that selling. And that weren't enough, inside the candlestick, the red represents the sellers, the green represents the buyers. You see this moving in real time on the 1 minute when it's an open market. So watch some of the other videos, you can see. And you can literally predict. And you see when, like, the buyers are losing strength over here. And it's like, hey, sellers are going to win. And that means that stock's going straight down at this, well, like right in this area here. These are aligning up with it, So this is giving you a direction, showing you a direction to go. This is showing you the strength of that direction with this meter. This is showing you if it's stronger or weaker than the candle before. All this stuff is designed to help traders not just roll the dice, but literally know what direction the price is going to go. After you get used to reading it, it gets easier and easier to say, I know I can go this way 10 cents. I know I can go that way 20 cents. Drop in 100 shares, drop in 1,000 shares, whatever it might be. And you make that quick money and you get out, and then you do 30, 40, 100 trades, and you're making, a lot of money, small amounts from $50 to $100 to $500 to $5,000 a day or in a half hour. You'll see me do it in a half hour, but not with the strike and recoil strategy. You're usually going to see me trade 50 to 100 shares and try to get $100, $200, $300 a day, make a living day trading simply and easily, and get in and out and be done in a half hour to 45 minutes, and then go on about your life or your job or whatever else you might have. Get your car payment paid for, your mortgage payment paid for, and quit that second job or whatever you need to do until you get confident enough to trade in a larger share size anyway. So then down here you have the trend, which is really an important indicator as well, ADX trend. So that one would be one that you'd want to see if you're actually in a trend. Now, if you want to know all about these, we'll talk about this too. If you want to know all about these indicators more, there's a series about these that's put out by the $1 Million Margin Club called the Toolbox series. God, I couldn't remember it for a minute. So over there, the $1 Million Margin Club YouTube channel, there's a Toolbox series that gives you details. It gives you even the mathematical formula about how they're all designed in codes and everything. So it's worth watching those if you want to get better at trading and get these indicators on your in your trading toolbox yourself. So this is interesting. This is a level 2, really the only level 2 indicator I've ever seen. And it's important to note when you start to use this that you're not actually seeing anything but level 1 up here. But because it can't Thinkorswim, there's not a way for it to transfer this to a chart to give you the readings. So the best way is to read what's coming up. But what it does do is, when the shares get large here and they're trying to sell off real quick, because it's not just one trade, then they adequate it to it's winding up. It's like, say there's 5,000 shares, then there's 4,000, then there's 3,000, then there's 2,000, and you see the volume going up, and then suddenly you know that they're about to all sell or buy, be bought up, and then suddenly the stock's price is going to pop, right? And that's really the secret of reading level 2. Usually you do it just by watching them, what's about to happen, making note of price, where you might slow down a little bit. 483.31. This is a little small for a large cap. It'll still just flip instantly, right? But I mean, you'll see many that are much larger than that. So this will tell you when that 5,000, 4,000, 3,000, this little light will light up and say it's absorbing, because your price action isn't moving. You're seeing all this volume, but this price isn't moving. When you're looking at the price on the chart or anywhere else, on your market maker, it's just not moving. It's just stalling, but volume's way up. Why is that? Because they're all being bought up or sold off, so you're waiting for it to pop. So this is going to signal you something big's about to happen because volume's high, but the price isn't moving. And it's going to actually show you which way it's likely to go by coloring it green or red. So again, when you get used to, particularly for new traders, this can be really, really handy. Knowing that. Now with large cap and mega cap, it's not as useful as say a small cap, a mid cap, small cap. That's going to come into play more often because those are really thickly traded, and this will happen a lot. On a large cap, it'll help you from time to time, but you're not going to see me have this up. I just wanted to show it to you on the Strike and Recoil. You're not going to have me. You won't see this up. You see me up do this when I do more momentum trading on Thinkorswim. Sort of an oxymoron because if I were to do momentum trading, it probably wouldn't be on this platform, meaning buy high, sell higher, keep buying high, buy when you have a catalyst and the stock's taken off. A lot of platforms aren't as fast as others for that type of price action. I mean, you can do it. A lot of people will use the ladder here to do it, real quick, and they get really good at it and they keep it up on their whole screen. I don't trade that way, but I will show you this when I build it, how you can do this in a few minutes. If you want to stick around for the next clip here, I'll build a whole layout for you. And then down here, what you can expect to get and what I built, you've got a 5-minute, this is a 5-minute 2-day right here, okay? And that's to help set my Fibonacci levels. Now I have the levels locked up here on every chart. You can see when I opened this, it wasn't locked. Yeah, so these aren't locked, but you can see that there's our Fibonacci retracement. So if you wanted to, market Fibonacci level, it's always left to right. You left click and then drag, and you're usually looking for the high to low, then you left click again. And then these are creating channels or support and resistance levels. Why is it giving me that weird message? Hang on a second. Clear drawing set. Okay, yeah, I guess that's what I want to do. I didn't think I had any other drawings on there, so it was scaring me. And then this is that was a 30-minute. That's a 5-minute 2-day. Was that the 30-minute? Sorry, guys. That was a 30-minute. And I do a lot of the pre-market layout. I have that chart there because on the Day Trading Volume 4, which is a book that shows beginners how to trade the open, it lists the 4 breakouts that are most commonly used. And one of them is a 30-minute breakout on the pre-market. And I find that to be my favorite, most respected level. So if I'm going to trade the open, often I will mark that level. And if you go on and get the companion book to that, it has the Holy Grail where it takes all of the open strategies, and then throughout the day it creates the channels or the levels to really trade those breakout levels throughout the day. A lot of thought went in these. I mean, the writers of these books and all the different traders and everything over many, many, many years of trading, decades of trading. What is most commonly respected? What is most commonly used? So it's a good idea to speed up your education and get a few books that might bring you right up there. I mean, they're not always going to work, guys, the levels, but it's just knowing them. Once somebody tells you this is what you need to do, this will always work. This is how I make all my money. I always look for just this one thing and it always work. You need to run away from that person because there is no always. There is no always works. It's just bull, but if you can, the good news is that it will work a lot of the time if you see a pattern. So just remember, hey, it may work, not always work, it may work. And I don't know, I'm not talking about a specific person. I just worry about when somebody says, buy this course, because this will always work. Sorry, I had to get that out there. Here's where you would mark a fib too. This is the hour. This is really good for historical data. You mark where the stock abruptly stopped and turned around. You would do that with, God, none of these are locked because I built this thing. Just built this thing. But you would take a level like that, you might look across and smooth and see how many other places it can tap. So I might raise that up closer to that high right there so that I caught that too. And then I would look, so that's 496. And then what I would do is I would smooth that out to exactly the even dollar. And that would be the level that I would watch closely if the price action were to come back up there. So that's historical data. It can be, on a 1 minute, a 5 minute chart, 1 hour chart. It can be on a 5-year daily chart. It depends on how you trade. But if you're scalping, you need pretty recent historical data. Like here's another one. You see, like it stopped here a bunch of times. It stopped right here. Then I looked across and I see, hey, it's already respecting it right there. Excuse me. So probably, yeah. See, there it is. It's 181. What it is that saying it came back down to the even dollar. Whenever I can get close to a whole dollar, not an even dollar, a whole dollar like that, where these levels were close enough to it that it respected it a bunch of times. You see that? I'll smooth it to the whole dollar because people naturally, the human species naturally takes trades at whole dollars and half dollars, and they put them on their market order, whatever. They put alerts on it, and it's easier for them to remember. So again, this is just basic, simple stuff. Most people don't tell you how you can become a profitable trader just with simple information like this. Okay, here's another one, another good level I would mark here. And I don't know if that, yeah, it is. It's close right to the 90. If I smooth that out to the even dollar, it's on the even dollar. Look how many times it tapped. Tapped in here, tapped again here, almost tapped there, just tapped and kind of broke through. So, I mean, not everyone's respected, but boy, is that a good level to watch? Absolutely. And the fact that it's a whole dollar as well. So there is an indicator that these little white lines, that's the whole and half dollar indicator, which is usually at the bottom. That's it right there. And that's going to mark every whole and half dollar so you don't have to draw them. And it's a good idea, and they're supposed to be made so they're not in your way as much. They're kind of light. What you see right here, you won't normally see because the market's closed. This is the market magnet. Again, watch the Toolbox series, but I have a lot about that. I have them on here because I'm going to be using them. I believe them, and this is what the 2026 Thinkorswim prop firms called for, is what you want to have, other than this, unless you're doing momentum trading, which I'm not going to be doing. So I'll literally take that off right now so you guys don't get confused by that. So that's the level 2 breakout. And then that'll happen because I messed up the chart. So you just spread that out again and we're right back to where you were. Now it's easier to read. And of course, when I'm in the middle of action, you won't have all this stuff at once. This is showing you past history. So there's the MACD literally telling you which way to go based on EMA crossover. See that arrow? That's another indicator that's on here that's amazingly, it helps you. It's right almost all the time. So you'd want to get that one. And again, not to overstate it, the reason these are here, the reason people want them, the reason they're commissioned to be built and paid for by coders is because they work and they help traders get better fast and make lots of money. So I'll have a link on how you can get those. You can get them in a lot of places. If you get them on my channel, obviously it helps me if you use my link. So I'd appreciate that. I appreciate subscribing. And because I don't sell courses, basically everything I'm giving away for free. Trading live is for free. I'm not having you join a group or anything. It's just all free. And then the last chart I have down here is the 4-hour. Again, a lot of people will do their historical data based on that. You can see there's another good level right around right there, right here. And you can see day after day it comes back and taps those. So if you mark it for, like, say we mark that, okay? Say we had marked this level. Oh, none of these are locked. We had marked this level right here, right? Absolutely respected it right here. Kind of respected there, turned around, you know. So here it stopped. Okay, then went around. So stopped right here, then continued to go down. So this level The same thing here. This level got respected time and time again. Time and time again. I probably would have made it the 50-cent level, 477.50. Again, guys, I'm just trying to point out simple stuff that it just happens day after day, time after time. Like if if at the 50-cent level, right around there, you have it hitting, to like take a scalp in there, go the opposite direction, ride it back the other way, go the opposite direction. It's flat topping here on a this is pre-market, but this is what they call a tweezer move. Remember learning the patterns within the patterns, right? So you have here, you made a bull flag here and it took off. That's when you would go in that trade on that candle, and you would have wrote it up. If you took that off the bull flag, which is right here, there's the pull, here's the flag, the second candle going up right here, say 485, you got it. You got off the trade all the way up at $4 higher. This is just an example of knowing a pattern and how to trade it. Okay, here's another one. This is another bull flag right here. Here's a pull. These, if you get the candlestick pattern playbook, it tells you there's an 82% probability that this pull slash flag, if it doesn't go halfway down the pole, that this will work. So there's a little bit of a hiccup there, and then it took off. And then you look at the pole from the bottom of the flag. So that was 467.50, right? And when did the pole start? Let's just say it started here and not down there because there was a break there. So $10. So theoretically, according to the strategy of the bull flag pattern, when you go in, which would have probably been here, and you would have got scared at once on the second because that got green for a second, right? This should be going $10 from this price before the move's over. 469. Yeah, I went 20. So anywhere in here you could have got out, or just ride it till it starts to reverse and get out. That went over $20 up. That's an amazing bull flag over a period of the next day. You held it into the next week, took it pre-market. You could have taken it open market right here on a bull flag move, and then boom, There's a lot of other things that would have probably backed up that move that I'm not going to get into, but that's just a simple way to look at it. That's the candlestick pattern playbook. I have a link to that too. That's the only book that rates them. So I'm giving you gold here, guys. You can take it or leave it, but this is very, very helpful stuff. So that's the entire layout. You can see how I have the market and the bid and the ask and the flat and and if you go into here, you're going to see it's on auto send. Now you can trade all kinds of different ways with brackets and things. When I'm scalping, I'm not going to do that. So I'm going to go ahead and show you guys how to build this next. So stick around and we'll be doing that next. Hey everybody, this is the professor. What we're going to do today on Day Trading for Success is we're going to build the new 2026 layout that's being used by all the professional traders here in the studio, as well as the prop firms. Now, there's a lot of custom indicators used in this. What I'm going to do here is just build you basically the grid and the layout. It's up to you what kind of indicators you want to bring into it. You don't need to have any of them. I think they're helpful, but that's up to you. So it's on the default right now. This is what it looks like. And then the first thing you're going to want to do here is you're going to want to go to the setup wheel. And let's just pretend I already clicked that. I'm going to drag this over because it would show my account. So you go down to look and feel. Okay, and now you're going to want to change. It depends on what you like, but everybody here does dark, a darker thing. And we go to old school layouts, particularly specifically because of level 2 is easier to read right there. Okay, so I'm just going to apply that. And now that's in. Now I've opened up this little side window here. And this is how it would come on your default, but let's get rid of these. And we're going to build this back with scanners in a minute. So we'll probably just start with that actually. So if I wanted to do watch lists here, I'd open it up and I have pre-saved watch lists. And really, we're going to want to get the ones that I would use for trading the strike and recoil, the live trading. But these are used by many professional traders right here. Like this is the one that they sell you over on Warrior Trading for a fortune. This is another one like that. So these, if they're not exactly the same, they're very, very close. So you can get those for far cheaper or free in most cases. So let's load the first one. Okay, and we're going to go ahead and make it, I'm going to make everything green so that they all link together. So then I'm going to open a couple of others that I'm going to be specifically using for trading the strike and recoil strategy. Okay, so there's the next one, and let's do, actually I think I only need those two, but let me just take another look here. No, I'll use that one too, the 50K. So those three will go in. You can see the market's closed right now. Now this is what I'm going to be using when I live stream. So if you want to, you can trade with me live stream for free. Make sure you subscribe, which helps me anyway. Please subscribe if you think you're getting useful information, and then set your alert, and then you'll be alerted when I'm trading streaming live for you. And it's free to come in, and obviously I recommend you seek the advice of a licensed financial advisor. I am not licensed, so that's my disclaimer. You need to take responsibility for your own trades and do your own due diligence. I am not licensed to give you any advice, okay? So, and really, unless they're a licensed financial advisor, you should not trust anybody. That's just the way it goes. Probably not some of them too. We won't go down that road. So anyway, this is all I pretty much do. I might open the message center in here too, basically so any of the trade messages won't come on the screen. So that's the first thing we do before we're going to flip into charts. Okay, guys? So the next thing is charts. So mine's going to open up on the flexible grid. This is how yours might open up, but we're going to go right over to flexible grid, and I have a 6 screens around me, and I have the layout set up right above me so I can refer to it, the prop firm layout, and the one I'll be using to trade stream live in 2026. So I'm going to just look at that real quick, and what I know I need to do is I need 3 basic grids across here, and then I'm going to build everything down from that. So on my first one, I know I need to make 3 spaces here. So I'm just going to kind of get the grid open here for a minute. And then over here, I also need 3. And you make sure you click the last one down. And then this one, I need 1, 2, 3, 4, 5. So 1, 2, 3. So I just need one more 4. So that gives me 5. Make sure I've got that right. Yeah. Okay, so now I'm going to build this. That was the quick way to get the grid to build everything I want. Now, obviously, guys, you can do this in a different way by having more screens around you. I'm going to try to make it for all those people that only have one screen, and there's a lot of us. You can put the general information you need on one screen, but if you want it really, really big, then maybe you want to slide charts over, and move things around. And if you're slowing down your computer too much, remember, every chart you open is going to slow things down. Okay, so more and more data that you put on it. Okay, so let's go ahead and link all these green. It's going to automatically do the default, which is a chart. Give me a second, we'll get this all switched. You have to sit through. I'm not going to stop recording and recording again. Sorry, guys. You'll have to sit through some of this. You should think and reflect. All right, so this is going to be my primary chart over here, and it's going to be a 1 minute, so I don't need the sidebar. This is going to be news, so I do need the sidebar here, so let me mark news. Sometimes you have to kind of spread these out so that this fills in, so I'm just going to mark that news right now, and then get rid of chart. Remember, get rid of chart. Now I can get rid of the sidebar. And then this one is going to stay a chart, so I can get rid of the sidebar. So that's the beginning. Before I start building the charts the way I want them, I'm just kind of getting the grid in order. Now over here, I'm starting with the active trader at the top. So that's AT, active trader, and then get rid of the chart. So that's the sidebar has. Once you've done that, unless you're planning on really changing your layout on a regular basis, you can just get rid of the sidebar. It just takes up space from left to right. And you'll find that if you're doing this, you need as much left to right space as you can get, right? And then down here, we're going to do level 2. So we'll mark that level 2. Get rid of the chart. Let's just make sure we don't lose track of what's what here. All right, then at the bottom, this is going to stay a chart. And I'm going to make this, I'll just change it right now. I'm going to make this a 15-minute chart. Actually, type frame. No, that's not how I do this. I'm sorry, guys. I am now confused. I'm not going to change the chart yet because I'm going out of order. Okay, so these are all going to be charts. So the first thing I'm going to do is get rid of all these sidebars. Okay? So now that I've done that, I can literally take off these little square, oops, take off that sidebar. All the sidebars are gone, right? So I'm going to take off the grid, which is right over here, and unclick it. And now it's nice and clean. Now let's start building these charts. Okay, so let's start with this one. I'm going to expand this. And I'm going to get into this gear wheel right here and take off things like I'm reading all these things to make sure, which is what you're going to want to do, to make sure that you we can start with the appearance of let's start with the appearance. So I like to fill in my candles, so let's make it yeah, that's fine. We'll make it the bright green. So is that right there? No. Why is that not? Look how bright that is. And then the red, we can, if you want, you can make it a brighter red or darker red, something like that. Okay. And then you can, you want to show the wicks, but you want to make sure that the everything's filled up like that. So doji can be white, yes, and then that'll change automatically. Then down here, the cursor's fine at that color. We want to make sure that these are going to be the colors down here, the ticks of the chart. And then you want the background, well, this is me, I'm saying I want. You want this to be like midnight black, as black as, see how good that looks. And you want to get rid of the grid. Now that's going to make every chart look nice and clean, so let's get a look at that. See how clean that chart got. Now we want to change this to a 1 minute. I'm going to do it here first, but so since we're intraday, that's how you do it. So 1 day, 1 minute, say okay. Now I'm 1 day, 1 minute, okay? Now some of the other things you're going to want to do on this, especially if you're using, I do, that I'm using custom indicators, is I get rid of the volume subgraph, so that's gone. Now there's no volume down here. There will be no volume. Now since we don't have custom indicators here, I'm going to put that right back on for you. I changed my mind. All right, so it's down here. These, you can just click and slide these, okay? And now I'm not going to be showing you how to use a chart. I mean, you might get some of it out here, but I have a lot of videos on how to do that. Now I need to get the tools, and these tools will be on every chart. So let's open this. See my tools down here. It says off. I want them on each chart. Apply. Now they're going to come up with a default tools. Let's click that, and we can change these by putting what we want. So I want to change the first one to a panning tool. The reason I do that sometimes is the charts get so small. I want to make sure that's always up there to pan. And then the next one I'm going to change to the price drawing tool, which is right here. Okay. And then the next one, which I most commonly use, is a Fibonacci retracement. Oops, sorry, drawing tool, right? Stop doing that. Drawing tool. There we go. Fibonacci retracements. And now I have to add a button. And I'm going to do a trend line, and that should be down here, and then I'm going to add a button, and I'm going to do a rectangle. Now these aren't probably used, you know, it depends on how you trade, but a lot of times I will mark an area like that. Now I've saved these across. Now I lock them with that right there. Now these will end up on every chart. They won't be locked until I lock it, but now they'll be on every chart. Why that's so important is right off the bat, if I want to show you stuff, I click the pan and I do that, right? So now the other thing we're going to do here is we're going to put in some moving averages. Now when I opened up that right, which is the chart studies, because I am a coder, you are going to see things that you do not have on your normal Thinkorswim. So don't start calling them and going, hey, how come he has, it's because I code for Charles Schwab Thinkorswim. So I have stuff that's not even out yet, and then I have other stuff that's been approved and it's out. So yeah, so that's why you won't see it. A lot of stuff that never makes it out, and so on and so forth. But it's one of the reasons why you know, learning how to use a prop firm layout might really help you. But when you're brand new, it's probably not the best way to start. Thinkorswim has a lot of really good tools. Get used to it. See which ones you might want to use by watching other videos of people trading, or just slowly but surely work your way into them, because most of them, it's hard to get for free. If you type in free indicator on this channel, there's a whole bunch that are free. Most of the real good ones have kind of moved on since the free. But if you follow along with me, when I design one, before I sell it or release it to Thinkorswim, if I've been contracted to, I usually give it away free for 48 hours or so. So if you keep track of stuff, keep track of this channel. But if you go over to the $1 Million Margin Club right now, I know that they have one totally free indicator, so you might want to look for that. But anyway, let's go into the let's start off right off the bat with moving averages. EMA. Give me a second here, guys. Okay, I'm recording. I haven't done this so long because what I do is I save them and I never have to go back and click this. So we're looking for this moving average right here, right? So I'm going to click on that and I'm going to add in 2 of those. Okay, we're going to change those. That's a default on there. And then the other thing we're going to put in is in the VWAP. Some people call it the VWAP. And those people are wrong. No, I don't know. I'm kidding. So VWAP right down here. Okay, so we'll add that. Now those are really the main 3 that I use here. Okay, and they're right here on here now. So now let's change these around a bit. So I'm going to show you some stuff that's going to take a little while, but it's important to do this. So let's start with the VWAP. So the upper band and lower band I do not need. There's all kinds of ways to get rid of them. There's how I just got rid of them. Okay, so we're just going to do the VWAP, and we're going to make it a bright red, and then we're going to make it triple thick. It's really one of the most important free indicators right there. Boom. And I'm going to apply just so you can see there's our VWAP, which is at any time is considered to be the value of the stock. Okay. Scalpers don't really think about that stuff, but if you're doing a long-term swing, it's probably something to think about if you're doing your really studying your stock for fundamental analysis rather than just patterns and going in and out, right? Oops, I shouldn't have closed the whole thing. And then in here, let's go back. So this default is the 9, which is easy. There's a reason that's a default, guys. That is one of the most common levels used. I see other videos where people do weird stuff, 22s, 19s, 17s. It's like, I don't know where they're getting this from. Are they trying to jump the gun on the levels? I don't know. But you know, we have a friendly friend now, and you can ask ChatGPT what is the most common. I would ask it like 3 times just to make sure. Let's do a gray for the, it shows you the color right down here. So my 9 moving average is going to be a gray, okay? And I'm going to make it double thick, okay? So that one's done. Now this is already saying 9, but we're going to make this the 20, okay? I'm just joking around with the levels, guys. Don't, he doesn't know what he's talking about. This is the, whatever works for you guys. We have a constant good time here in the studio joking about it. If it works, man, then do it. I'm just messing with you. Okay, so these are the 3 things that we most commonly use right here. I'll throw that out there again to be on the chart. Now, really, unless you start to get into custom indicators, you don't really need anything else on this chart. Now, if you want to zoom in, you can left click that and just kind of left click down and drag, and now I have a way zoomed in. I'll just show you a few things. If you want to go back, you can just auto zoom and it starts the chart back as far as you want. If you want to pan left and right, you know, like that, it won't go any further right now, but if you want to make this so time exit. This is at 820 because I messed around with it. So you put that at like 10, say, is pretty much the average people use, 5 or 10. Now it gives me a little bit of room to drag this way or that way. But again, we're on a 1 minute, 1 day, so this isn't going to drag over here much. But anyway, that's what you can use that for. Fibonacci levels, you click on it there, you left click, drag down, left click, and then there's your levels. Usually you go always left to right. Low to high or high to low, it doesn't matter, but always left to right. I'm just showing you some quick stuff. Clear drawing set, okay, that's gone. Trend lines, you can left click, okay, and then you drag up. Now normally when you set a trend line, you're looking for multiple touches. You know, in this case, that's just screaming to be, you know, where you would mark. So that would probably be it. On a 1 minute chart, you're not setting trend lines. I mean, obviously, it's just not a good call, you know. People do it. I've done it, but it's just very, very short term. Anyway, that's how you would do a trend line as far as how the mechanics of it, you know. And then a rectangle box, you left click and drag over and then release. And then now you've shaded an area. Keep in mind, if you do that, you can't move inside this box. See, I had the pan. You have to be outside that box to move, but you can clear the drawing set there again, and that's gone. So those are the tools that I would use and that I need, and that's your 1 minute chart for now, guys. Okay, so we'll close that up, and then we're going to show you how to save it. So here's how you're saving a chart. You left click that little burger there, you open this up, and you go down to style, and then you go down to save style. And then you can mark it in, and you could say, like, I would say something like clean 1 minute. And then it's clean because it has the minimum amount of indicators. And then I make sure that you click that, and now you've saved it. Okay, and then if you want to go back in to find it and put it on another chart, you'd go down to load style, and you can see I have a whole bunch of styles in here for different things. So, then you don't have to keep redoing it. So with that in mind, we're going to go speed this up a bit when I load up the other ones. Okay, so down here is a day chart. So I'm going to click that, and I'm going to go ahead and open that up. And then we're going to go into, now I don't have to build this, so we're going to go into load style, then we'll go over what is on it, right? So the day chart is, hang on, now I have to find each one of these, and you guys are going to see it, and you're going, it's right there. There it is, a day, okay, day. All right, so now the day came with an ATR. Now you'd want to load that in. So that's what I loaded in, just a regular ATR. And that is just an absolute must to have on your day chart, in my opinion. Okay. And that, if you go over any candlestick, right, and then you look down at the ATR, right down here, that's going to show you the price that range moved in that day, $10.50. So having that range and marking that range before you start to trade, there's all kinds of ways to do it with custom indicators and things. I don't know if they really have it on Thinkorswim. I'm trying to remember. I know I designed a bunch for Thinkorswim. I would get one of those because they have the RV range as well as the full range. RV range is the half range based on that Day Trading Volume 1 book that everybody buys to trade large caps. So, but that's how I would just the bare minimum of setting up the 1 day before you start to get into getting cooler custom indicators. That is very useful. Now I drag that down real tight because you can just open up a chart to use it like that whenever you want to, and then reduce it by, I don't know if you saw what I did there. I left clicked here. Double clicked. You don't have to go in here and say minimize cell, so maximize. So the other way would be to go in here and then you would say restore cell. But if you just double click up there, it works. Now I'm going to drag the news down because I only really need to read the most current few lines. right there when I'm trading. And now I have the basic 1 minute chart. Now that's your volume is down here. So if we were to zoom in, I'm left clicking and drag. Oh, it didn't. What did I do? Now is it like messed up? Every once in a while mine just stops working, which is very annoying. So let's get that problem solved. Okay, so I had to restart and we are back. So what I was trying to show you was if you clicked on the price, whatever, you get it. You can do it with the pan, but not the pan, but the arrow too, but I don't use the arrow. You just left click drag and you can, I think I was showing you that before, and you can make that zoom up. But I wanted to show you down here the volume. It was the main reason I was doing that. And that's why I realized I couldn't do it. So yeah, so this is the regular volume you will have, and obviously you're watching spikes as these are happening live. They align with the candlesticks up here. These candlesticks align with how the price is changing, if you didn't know that stuff. And that's basically the price moving up and down makes these patterns. And this is on a 1 minute, so it'll open and close within 1 minute. A green candle opens at the bottom, closes at the top, and then the red candle closes down here at the top, opens at the top and closes at the bottom. And so that means it's going down, and these means it's going up when you had price action. And these colors will coincide with that. So that's basically, and you can move your chart by left clicking down on your mouse and moving that up and down like that too, if you wanted to do that. Okay, so that 1 minute is done. We finished the day because I went ahead and basically just, now probably you would want this much smaller, so you just left click and drag that down. Okay, and then you can set your different, let me lock that. You can set your different time frames here. You can do more than a year. You could go back like 20 years here. So you could do just, wouldn't it have been great to buy that stock back here? Look at that, huh? It's for $25 and now it's $400. Yeah, that was back in 2020. Of course, if you bought anything in 2020, since the SPY seems to almost always go up, then you'd be doing much better. That's the Warren Buffett style of trading, right? All right, so let's go into this area right here. This is your active trader. Now, if you go into this, you can see this is what basically the default is. I'm going to show you how I would set it up. Now, you can click these and then remove them, right? Or you can just left click and drag those out of the way and they'll disappear like that. So I'm actually going to use all these here. I'm going to drag the buttons up on this level. There are two levels, which I'll show you in a minute. And then I want to have buy bid. I'm going to kind of drag it over there and kind of move it around. And then sell ask. We'll put that below the bid. Okay, and then we're going to want to have, so we did flatten above. Flatten should be here. And then we want to have buy bid. So we're going to move this up here. And then we want cancel all. Not cancel all. So I do cancel all right below the sell the ask. And I'm looking at the one I've already built up here. And now I have buy the ask. Right below cancel all and sell the bid. So just the opposite of the other two. In case I have to get out of a position, then I ended up with the reverse. Okay, so on the second line, we don't need that. So we want those two, but we want to have, this is the time of day enforced down here, so we want to have that there. Something like that. Okay, so I did that pretty quick. You can go back and look at it again, and then it's going to change the way it looks here. Let's just kind of drag everything over here like this. So there's sort of what it looks like now. When I close this tighter, it gives me the look that I usually trade with, but it also has to do with what's down here. So what I usually do and what we do here is we get rid of that. We don't care about that. And we drag the price up there like that. And we say, okay. And now you have less boxes here to watch. Now this is your ladder down here, right? So a lot of things are on here too. So you open up this little gear wheel here. I don't need the, oops, that's not what I wanted to open up. I wanted to open up, what do I get into? Oh, go like that. Oh. Customize. No, that's not what I wanted to do. All right, hang on a second. Okay, I had it right. I was go to customize. So I get rid of the volume, and then I keep the other stuff, and it makes it cleaner. Then you can just click, left click, and drag these the way you want. Sell orders, buy orders. So then just get the price more in the middle. A little bit in the middle here like that. Now, if you use the wheel, you can go up and down really quick here. And sometimes you have to be pretty fast when you're setting your trades. And there's all kinds of other functions to this that you can do, learn to use. But this is basically what you need. So I'm showing you how to build a layout, not necessarily how to operate every single tool on your layout. So this right here, you can change to be different numbers. If you go into the setup, this is pretty good. You can go up and down in 50s, or if you just if you left click on something, then it will immediately go. Then it'll go down in increments of 50. I have it set at increments of 50 because we'll be doing pretty low share size for this. So there's your ladder. Now, since I don't really use the ladder, I keep that kind of closed like that, and I'm on to the level 2. And often, because my account number on YouTube will be shown, some things a lot of traders don't know about is Charles Schwab basically goes through their own broker to make the trade, sort of like their own dark pool, even though they're a broker. And if you do that, I do that, it will show my account. So since I'm on YouTube, I just drag these over. Not everybody does, but you don't really need to see those because you're not getting filled by those most of the time anyway. So that's going to be the price of the bid, the price of the ask. This is the spread is in between the two. And then this is what the market, it's closed market, so it's not coinciding, but this is the price you would get if you're selling market. That's the price if you get, or buying market, and this is the price you get if you buy the bid and or buy the ask. This is the price you would get here. Okay, so now let's go down to the 15-minute chart. Now I keep this so I have perspective. Another one not locked. I keep this so I have perspective as to when you get lost in the micro of the 1 minute. I like to see what the bigger moves are. So let's maximize this for a minute, and then we'll go in and we'll change the style. I have a 15-minute already loaded, which is basically, it doesn't have any moving averages. So basically, all it is just a clean chart like that. So there's nothing for you to know. There's nothing in here, any studies. It's just nice and clean. And then that's done. And then I can see the price action. Again, all the tools will stay here and you can lock them. And then I can see the price action as I'm trading that day and look at the bigger patterns and look at if it's swaling and I'm missing sort of a trend. And I can keep that pretty tight down here and still see it, see all the level 2 and see all that. Now let's go over to these charts over here. And this is going to be a 5-minute chart here. It's going to be a specific time frame chart. So, how many days a 5 minutes? So I'm going to load a style, and it's going to be a 5-minute, 10-day clean. Nothing else is on. I lose all this stuff and everything that's on here already, and I don't have to get rid of it. So you'd want to build them and save them, and I'm not going to really show you because it's nothing. It's very simple to do it. So now I have a 15-minute, and as you can see, I'm sorry, why did I do 15-minute again? I meant to do 5-minute. Let me do that again. So load style, that's why it's so great to have them loaded. So I want a 5-minute, 10-day clean. And I don't know why this is down here still. So let's get rid of that volume. You might want the volume. I don't need the volume on the 5-minute. You might want it. I'm going to take it off. Just click it off right there. Okay, apply, off. And it also has some other stuff on it that doesn't look too clean. So if you want, I think I do leave the earnings on here on purpose, but I don't usually have that there. So let's get the day, the weekend day. So if we go to there it is. There's corporate actions, and there's that's not on there for some reason. I got rid of the corporate action. I'm sorry, I'm looking for the we don't really want the options. Give me a second, guys. There we go. Show expiration. I don't need that. That should be it. Yeah, so that red line went away that was going up and down, and that little circle went away too. So there's my 5-minute 10-day. Remember, I can auto zoom, or I can just click this over like this, drag this, left click and drag that up and down. And you have this over here. If you left click, you can move the stock. Left click on it, you can move it back and forth that way too. There's all kinds of ways to move this around. Everybody has the way they learn is their favorite way. So there's a 5-minute 10-day. Now I'm going to open up a 5-minute 2-day. I'm going to build. We'll lock that. Excuse me. So that's done. Now this is going to be a 30-minute. So I've already done all these. And all it really is you're going in here and you're setting the time frame for the right thing you want, right? So I want a 30-minute here, so I'm making it a 30-minute, but it's going to have other stuff that I don't want. But there's like I'm going to do that for 10 days, right? But it doesn't have the look and has all that other stuff with the candle. So you have to do the whole thing with every candlestick, all the other stuff, the dark background. So on the 1 minute, you could start with your 1 minute and then do the other stuff. That if you loaded your style there, that's a good way to do it. We did a, did we just say 1 minute clean? I think we did. You could do it like that, and then you've got it all saved nice and pretty, and then go in and change your time frame. Change it for 10 days and make it a 30-minute. That's another way to do it. And say, okay. And that still has the corporate things on it, which I didn't take off. That's it. Right there, yeah. Apply. Okay, guys, so then there's our 30-minute. Now I have these saved, so I'm going to go ahead and do the 1 hour now. So hang on. Style. So style is load style. And then I do my 1 hour now. There it is, up at the top. And then down here, my final one I'm going to do is the drag this over a little bit, get the style here, and then I'm going to do my final one, which is a 4 hour right there. Now I had those all saved already. So now this is pretty much the layout, and how I trade it is these are shrunk down. I start at the bottom. So I can open them up by just clicking the little burger thing, right? Put this down again. If I need to mark a 30-minute, a 1 hour, a 4 hour, or look at a bigger picture. And then this is the 5-minute 2-day, which is mostly set for 2 days to do my Fibonacci level on a 2 days real quick. And there's my 5-minute 10-day, which is more like looking at the price action. You know, these two things are going to tell me what's happening on a much larger than the 1 minute, so I can just kind of see what's happening. Obviously, since it's the end of the close of the market, I'm kind of making it look better with the dark. This light is post-market or pre-market, you know, and you can see that it just goes across, you know, to the previous day, and I like it when it's nice and dark and pretty. So that basically is the layout without all the custom indicators. Okay, you can trade it this way, and that's how you build a layout. That's how now once you build it, then you want to save it. All right, so let's do. So you open your setup wheel, and then you say save workspace as, and then we can just call it a new layout. I'll call it clean. Sorry, I'm talking over my microphone. I didn't cap anything, but so new layout, clean, save. Now, if you go back in here, you'll find the new layout clean somewhere in here. Yeah, there it is right there. So, so that's the trick, guys. That's it to how to build a layout. Now you can do all kinds of things. There's all kinds of things, and my recommendation is you go to the education or the help on Thinkorswim up here, and there's a whole learning center here. Let's open that up a little bit. So education, it turned all white. Oops, no page found, sorry. Request not found. Help. Oh, this is a whole nother thing that you should every once in a while collect your garbage. Get that cleaned. That helps speed you up. I have a video that shows how to tweak your Thinkorswim. I don't know why that's not going. There we go. So they have so many things and so many videos, and so depending on what you like. And I love working with these guys and Charles Schwab and Thinkorswim. So you can just, don't go by what I'm saying all the time. Go get other professional helps that work on the platform and work for Charles Schwab. And I do coding for Charles Schwab Thinkorswim. So, okay, guys. So listen, I hope that was helpful. Make sure you watch some of the other content on this rolling video, and hopefully I will see you when I'm trading and I'm live streaming. Okay, guys, go green out there. Hey, hello everyone. This is the professor from Day Trading for Success. I am the head trader here. Today we're going to be going over the strategy that we traded today, and that we've been trading every day this month to try to make a minimum of $100 and then more, obviously, in 30 minutes to 45 minutes every single day. I stream live at Day Trading for Success 8143 if you're looking for the exact channel, but I think if you just type in Day Trading for Success, it should come up, or just obviously subscribe right now. You can get alerts, and then every morning when the market opens, actually before that, I go over the stocks, figure out what the picks are, talk about stocks for different strategies, and then I trade every day. So we're going to go over exactly how I'm able to accomplish green 92% of the time, and get hopefully people go along with me as a quarterback. How do I do that? What do I use to trade? How do I decide to go in and go out? So we're going to go over that a bit today by showing today's trades that just happened, but going over the strategies that I use too. So stick around. This should be interesting.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, so welcome back, everybody. What you're looking at here is a 1-minute chart. I know it looks busy. What it has on here are custom indicators that are used by prop firms that we use here on this channel to help people decide when to go in and go out. So these are indicators that are very, very highly rated. These are the indicators that the pros use. We're going to go over what these are very briefly, and then we're going to go over how we're doing for this month every day with this one goal in mind of making at least $100 a day. And then we're going to talk about the strategy itself and why it's so successful. It's a large cap retracement strategy. But let's talk about the indicators first. The most important indicators that we look at are all on this 1-minute chart. I do have some on a day chart that we use, and I do have some on a 5-minute chart that we use as well, and we'll take a quick look at those too. But right now the most important ones are right here. So how do you decide to go in a trade? Well, there's about 5 different indicators you can. Now we're going to talk about the strategy and how it says to go in, support or resistance levels obviously, but we're going to talk about the indicators that make it so simple to decide, if that's such a word I can use in day trading. But they really help you get that edge. So you're looking to get more things lined up that say, take this trade, whether it be long or short, more things that are lined up on how you do it. And in this strategy, retracement strategy, we do basically large cap retracement. So we're looking for the stock to go one way, and then we would trade it on the retracement. And then, like if it was going up long, then we would take a short, and then as it hits a support level, then we go long. So it can go either way. You don't have to trade short. You can just do the long trades, and we'll talk about that too. Well, let's get a deeper dive into these actual indicators right now. So if any of you have watched any trading or know a little bit about it, you know that Thinkorswim, which is this platform right here, it has a lot of indicators that are free. Hundreds and hundreds and hundreds, and they're totally adequate. But when you get to be a professional, custom coders are the key to you to getting really that next level up indicators. So one of the things that I do is I do coding for prop firms and other companies, and I try to find ways that these codes can also be available to you, to an average trader. And that's what this layout has, and I have links to go get each and every one of these indicators if you so desire. Let's talk about some of the most important ones. So the first thing you need to know is, when should you go into a trade, right? Now this one's called the Scalp Meter Pro, and inside these blue columns, it tells you where the buyers are and where the sellers are any given moment. So you can see inside a 1 minute candlestick. This is on a 1 minute chart. See these candlesticks here? You can see the strength. See how strong the sellers are on that? Right there, they're right at the top. So the blue column represents the volume, and the red represents the sellers, and the green represents the buyers. And then this meter is going to show you another way. How strong is it right now? So it's moving right now. Okay, so you can see it moving right now with this candlestick action. It's also going to tell you a couple other things. It's going to tell you the volume of the last candlestick, and then it's going to tell you if the current volume passes it while the action is going a certain way, it's a lot stronger. Get ready to jump on in that direction. Also gives you the overall volume for the day, 51 million so far for NVIDIA. And then it has another, and then the percentage, besides the meter, it's showing the percentage. Right now it's buyer strong. You can see it's going up. I'll tell you what that arrow is in a minute that's telling you caution, caution. But I mean, these are the indicators that help you, and they're going to give different messages. So the more you use them in a simulator, or maybe just trading with one share and practice, the more you use them, the more you're going to be able to instantly respond to what they do. You see, this is actually the MACD, which is basically telling you that to go the other way. This is a really, really handy. So you had a short move up on this one, and then it said, watch out, get out, and then it called it perfectly, right? And then you saw this jump up with it. Now it's saying down really strong. So you have a downward move, and nothing's stopping that right now. So it's just a matter of reading these. Now, they're not right all the time. Nothing's right all the time. And it's basically telling you something that has just happened. It's not telling you the future. But trading with the crowd, trading momentum, I often antiquate this particular indicator to, you're sitting on a surfboard and you're waiting for the wave. And then as you see it come, you jump on. So the wave's already happening. You're just trying to catch it. All these noises you hear are different alarms of when these indicators are triggering. Now, I actually have the alarms for the different indicators sort of silenced. There's a few of them that go off, but most of them are silenced, because when I'm live streaming every morning, the streamers, the people trading with me, don't want to hear all my alarms. They have their own alarms, and it just confuses them. So I have a few that I really need myself to trade, so I don't turn those off. But most of them I can just see by looking at the arrows and determine the action. But back to this. So this is the engine that drives your entry. So you're looking at that, and that's the first thing you're going to want to look at until we get into strategy, which I'm going to tell you a little bit about what we trade here for strategy. But this is the first thing you're going to want to look at. And then you're going to want to make sure nothing's conflicting with it. And then the other thing you're going to want to do, like just say this is going short. You're going to want to see if did it hit a resistance level as it was going up, and that's why it turned around. So you're looking for support and resistance levels too. But as an indicator goes, this is basically the best indicator, I believe, is out there. If you're a scalper, if you're a short-term scalper, this will work on a 1 and 5 minute chart, or a 2 minute chart. Anything below a 5 minute chart, I highly recommend using it on a 1 minute chart. That's what it was designed for, right? Now, this is a fairly recent one, and it's sort of like a training wheels indicator, but it's used by professionals, particularly to train people when to get out of a trade. Say you got in on this trade, you would look at this target up here. How far should I ride that trade in this direction? As you can see, this is very thickly traded right now, this time of day. It's not really moving very much. It's just moving a few cents. And how does it determine what that is? Well, it takes the movement of the last 9 candles, in which way they were stronger and how many pennies it went for stronger, right? And then it'll give you the target in pennies, and when you enter the trade, this just darkened out, but this will light up and it tells you how many pennies you've already moved. So right there will tell you like how close are you to 3 cents. Typically when you're trading, you want this to be 10 cents, 12 cents, 20 cents, 40 cents, higher numbers here. Right now, you wouldn't really probably want to trade this stock because it's going very slow. But I brought this stock up to show you the strategy itself, which we'll get into. So, and then it's going to keep an eye at your total P&L. So these two together work so well. And over at the $1 Million Margin Club, I think they have a package where they have the two of them together. I have a link to it if you're only going to get two. But really, if you were to purchase these, you would probably get your money back in a couple of days. They're not expensive. They're $24.95 over there. It helps support the channel. I am their brand ambassador and the only ones that really sponsor me. And I only really push stuff I believe in, and these I truly believe in. Let's get another look at a little deeper into here. So I open up, this shows all the studies that are on the chart. So these are things you would typically put on a normal Thinkorswim studies chart. You're going to want your EMAs on here, the moving average that's been smoothed. And this has the 9, the 14, and the 20. And then the SMAs, meaning this is how they move on a day chart. They'll be on a 1-minute chart, but it's going to show you where they are if you come across them. They're pretty important. That's the 50 average, the 100 average, and the 200 daily average. And then the other thing you have on this chart is the VWAP, the volume weighted price action. You want that. That's typically considered to be the value of the stock at any given moment. Although when it comes to scalping, that's not that big a deal. You don't really want to pay too much attention to that. And then we have the ATR multiple range. I'll go into that a little bit deeper in a minute. You have the multi-time alignment. I'll talk about that. The risk oscillator we just talked about. The MACD I briefly pointed to you. And how does the MACD work, right? That's an EMA crossover, convergence, divergence, and that's the 9, the 20, and the 6 that it takes to decide whether you should go up or down. I find this to be, I really respect this when it kicks off, and it has an alarm that says, hey, go this way. And that's really important for traders. And then you have the market magnet, which we'll talk about in more depth. And then we have the buy-sell oscillator, which is based on overbought and oversold, RSI, relative strength. And then the whole and half dollar, which basically marks every whole and half dollar, these gray lines, for any chart. Now, you can draw them yourself, but this just makes it really easy, and it's wicked cheap, and they're just ready and set up for you. And you might ask, why would you do that? Because that's where the crowd trades. They trade a lot on whole dollars and half dollars, so knowing those levels is so important. Then we go to the lower bar down here. We have the Scalp Pro meter. So that's what's on this chart right now. Now, let's look at this ATR for just a minute. It's going to get crowded here because I'm going to jump off this chart, and I'm going to open up this day chart down here. Now, this day chart has the ATR levels. What does that mean? Well, what that means briefly is that, and I'm not giving you an entire tutorial here, but I'm going to go over pretty quickly here. You're looking at the average true range down here of what would be the average price this stock would move every day over a 14-day period. Like, what's the average it moves in a day when you smooth out 14 days? So if I go over this candlestick, say right here, it says the average is $3.99. See when I go over? So just call it $4. Now, there's two ways you can mark the ATR. You can mark half of that, high and low, or you could mark the entire $4 up or down from where it last closed. Some people do it from where it opens. I do it from when it closed. That's when most of the people do the previous day, is showing you what was that average smoothed completely in. If you're going to the day that you're trading, it's not done yet. So it just confuses the algorithm that's figured out. So this is a really good indicator. You can put it up here to see the prices, right? And then you can draw them and mark them if you want. But it gives you the overall, what you're looking for here. But then this is the one with the labels, and they're just these little red and green lines, right? And then this is one, that, by the way, that's free over at the $1 Million Margin Club. You should pick that up. That's pretty cool. This shows you what the volume is per 1 minute candle over a 10-day average or a 1-day average. And when you're trading this particular strategy, which is a large cap retracement based on the RV strategy, and that you should look that up. That's Day Trading Volume 1, the RV strategy. I have a link to that book. That's the book that started all this stuff. And if you haven't read it yet, you need to have it on your desk, because that's where pro traders are born. So read that book. But anyway, I have a link to that. But this is one of the ones that I made sure they kept for free for you. So if you go over there, you should get that. But so this is something that is on this 1 minute chart over here. And it's just marked by lines because I didn't want the labels to be up here. So the solid thick line is the half level. That's the half level high. And then as you go down here, yeah, there's the half level low. And then the full ATR is that dotted line there. That's the low, and that's the high right there, right? So that's the full ATR. These partial ones that don't come out all the way, those are part of the market magnet. And since you see that right here now, that's this purple line, these little blue, light blue stripes above and below it, and these green and red arrows. And now there are videos over at the $1 Million Margin Club that shows every one of these in detailed action and how they're supposed to work and the mathematical formula that is being used. You don't need to know all that stuff, though. You just need to know how to read it if it's on your chart. Like, what does that arrow mean? Go the other way, you know? Or it's telling you maybe go the other way if you get enough cumulative data that says it's time to get out of the stock. It's telling me that it's done, the move's done. So you use the risk oscillator first, and then you can look at other indicators to help you. And the market magnet is ideal for entering and exiting. This is obviously everything's prior data that just happened. This always needs to be set under my picture, set for today, not 1 day. Your chart should be set for today. So if you go under your settings here, they have the time frame here, and it's on today. A lot of people put it on 1 day thinking it's the same. It is not the same. So 1 day. Make sure I've got the right camera on me here. Yeah. So this is set for 1 day, and it's going to tell you what 50% of the volume has been moving. That's the high of it, and this is the low of it. 50% of since the market opened, that's where it makes its own little channel. And channel trading is so important, right? So we'll get into a recap in just a minute, but of what happened today. But I wanted to go over the basics so you can get an idea of how you might be able to trade along with me every morning. So then this is the center, and it's called the magnet for a reason. This is where the most volume has happened to this date and time right here. So it always tends to gravitate back to that, and that's why it's called the magnet. And then these blue stripes will signal as they shoot across a volume that's just happened. That might signal that it's about to pop up toward the blue stripe that's coming in. So you always want to watch that. I announce it all the time when I'm trading, like, hey, this thing's about to pop. Look at it shoot in. That means it's like a springboard, like the price goes up with it. So you can kind of see. And you know, you tell me if you think something like that would be useful to you. So it's just like, you know, they're just a no-brainer that $24.95, you might want to get this indicator. I mean, obviously nothing works all the time, right? But this is a very accurate one. And then some of the others, I talked about the MACD, which basically is a crossover of your EMAs. So on the gray line, it's a 9 EMA. The purplish pink line is a 14-minute, and this is a 20-minute EMA. And then here's your VWAP down here. A lot of people only take trades long above the VWAP, low above the VWAP. That's a strategy. Doesn't work all the time. I think it's like putting darts, you know, and just throwing darts at a board. But I mean, it's good to see where that is to put it with the rest of the data, right? It might be a support level as this comes down. So you look at the other data, right? But, you know, look at how accurate the MACD is. It says it's going to go down. It went down. This is a buy-sell oscillator. The MACD is only the white arrows, okay? So MACD says it's going up or continuing. It's going up. Let's see if we can find a wrong MACD. MACD says it's going up. MACD says it's going down. MACD says it's going down. MACD says it's going up. This one's wrong. Well, it's not really because it went up. Yeah, it's just a red candle, but MACD. So MACD arrows, that indicator, highly respected. In the moment, it's going to feel different than me just going back and cherry picking an arrow, obviously. So it'll flash in and flash out. So again, you're looking at, is that saying it's going to turn around? So you got to take a beat and look at your data and use a little bit of your cumulative brain power about what you've been learning and watching. Once you kind of get that edge, the MACD is extremely helpful. The buy-sell oscillator is based on whether a stock is overbought or oversold. I found that when I read that, I think about it maybe taking another minute or two to actually activate. I typically do not use that to take a trade going the direction I want to take. I typically use it to get out of a direction. So if I get out a little soon, at least, if I'm green, I'd rather get out a little soon and be safe. So you will see like this arrow might pop up here, and then the price action is so strong, it just pushes it. But it's warning you like, look, it's overbought. Not many people are up. The oxygen's thin up here. So you want to look at that buy-sell oscillator as a message to like, this move could end at any minute. Get ready. And indeed it did. It pushed it up, but it turned it down, and it went down. And then even here, you see it turned it down. It went down. And then, now if you get both of these saying MACD and the buy-sell oscillator, but see here too, it's like it turned around, and at first you see it and it's like, hey, it's not really turning around, but then look what happened. So my advice on that indicator is wait 30 seconds, wait a minute, maybe even 2 minutes if you're getting in a trade with it. But if you're getting out with a trade, just take your profit right then. Don't get greedy. But again, another magnificent indicator that really helps. Now let's talk about these vertical lines you see that look so busy coming up here, 5 minute, 15 minute, 5. Okay, so this is the multi-time alignment. These are set at 5 minute increments. It's important to look at this on two different charts. This normally has labels up here. I took them off because it gets too busy. So what did I do with those labels? I put them over here. What do these labels do? A lot of people don't trade on a 1 minute chart, right? They trade on a 5 minute chart or a 15 minute, 30 minute, 1 hour, 4 hour. In fact, data shows that more people trade on longer time increments. What are they looking for before they get in and out of the trade? They're going to look at the candlestick price action where it has abruptly stopped or turned around, or where it's continuing. It's continuing the way they want to go. So if they want to go short on a 1 hour, meaning bet that the stock's going to go down, they're going to most likely go in down, right? They're going to go in down. So knowing what's about to be added, what's about to affect the price on the level 2, everything you see on the candlestick, what might make that price go a direction, other people trading at different time increments might, pretty good idea that they're going to make the stock go that way. They have a strong bias that it's going to go. See how it's going down with these? It's a strong bias that that's going to happen. Now, it's sort of a reset. Like every 5 minutes, you want to recalc. Like how strong is how many? There's 3 5 minute traders here on the 15 plus the 15 minute. Then you go over here and you got 4 1 hours and 6 30 minute people and so on. That's a big one. That's probably going to go up if it got to here and it was still green. This will change color depending on if it is still green. So it's telling you right here the color, but if you're used to looking at it over here, this is a quick read. But this also tells you what color they are. This is just going to tell you really quick. So I split it up. When you get the indicator, they give you all the versions, and you can bring them into different charts. Again, every 5 minutes, which is how this all started when I traded, I said, hey, look at the 5 minute on your grid. No special indicator, just your grid on your chart. When it gets to 5 minute, if the 5 minute is showing it green going up, probably people are going to keep going up with it. Showing red, probably they're going to go down. So get out if you're trading long. So that's how it all started. And then you realize that the longer time frames became just as helpful. So that's an incredible indicator. As we're over here, I'll just briefly talk about a couple of. This is the ADX, which is going to tell you whether there's a trend up or down. This is the market pulse that tells you what the whole market's doing. Well, the main indicators like the QQQ, the SPY, the TLT, and the UVXY, the fear indicator, bonds, and then the SPY and the QQQ. So those are both ETFs that people will watch. And that's telling you, hey, look, the market's going down right now. Now you combine that with that. Then you look at your price action. And then you look at a catalyst to see, hey, has there been recent news that's saying this should be going up or down the stock that I'm trading? You know, what's going on? And I have a 15-minute chart here too to let me see a little bit bigger action so I don't get caught up in the moment. So you may find this to be very busy. It's something you get used to. You don't have to have all these things open. This is where I take the trades, the active trader, where you can set your share size really quick, or you can just bump a share size here, and then you can change. You can, I have videos that tell you how to set this all up. I have videos that give you free layouts, and then I have videos that give you scanners. I mean, the scanners right now, you would get them at the $1 Million Margin Club, but this is where you're going to find your stocks under scanners, right? Now, these are all specially coded scanners, all right, that you can get for $4.99 that I put in. Like, this one has 5 codes in it, right? This one is ATR equals 10 or greater 4. Yeah, this is the one for the RV strategy right here. So let's look at a couple of others here. So these are some of the ones that I do, the professor. So this is a momentum scanner. This is a gap scanner. That's over there. This is the one that's used on a popular trading platform that only trades momentum. I won't mention his name again, but it's an exact duplicate. He charges money for it, and a lot more than $4.99. You can get that here. The one thing it would be missing, it doesn't have an alarm and have him saying, hey, I'm going to go over and trade this right now. You'd have to, see it and see that they're kicking off. These are a couple of the others. This is the one I just did, the mid cap one. And then this one that I use on this strategy we trade. And this teaching, I think, is the one that is, this is the one right here. And this has all the custom coding in it. I scan here. It's only set for 10 stocks. And it's going to pick out larger mega cap stocks that are moving over 100,000 volume every 1 minute, and a lot more, as you can see. And that's going to give us the price movement we need to trade this particular strategy. It comes in handy for just about any strategy, though, I will tell you. And if you don't want to just trade the large caps, I did one for just 50,000 above too that isn't set for a large cap, market cap. That 25 million actually means 25 billion minimum market cap. So watch some of the videos. I go into depth about these. There's all these different really wicked cheap scanners that I've created over at the $1 Million Margin Club, and there's a link for that stuff. So that's pretty much the indicators that I use. Now let's talk about the strategy that we trade every morning, which is so important. Actually, I'll start it with a 5-minute. So every morning I'll start, and after I scan, I'll pick the stocks that I'm going to mark up. And how do I mark them up? Well, I mark them up by historical data. So what we're doing here is just common sense. So many YouTube videos you see will just pull up a picture and say, when it gets down here, you should trade. That's a dip, and go in and go. I mean, that's very cherry picking. You should be able to mark your chart out before the day begins and have your levels all set. If you want to add to those levels, which I recommend, and I'll show you how as the day goes on, then you can do that. And there's ways to do that based on historical data. But when you start off in the morning, like this high wasn't here in the morning. So the first thing I do is I set a Fibonacci level. So the Fibonacci level, maybe was that pre-market? Yeah, I think we had a pre-market high like right here, or maybe right here, and I set the Fibonacci level high. It just isn't drawn over there. So basically, it's up here, and you can bring it on your chart. You always go left to right. You open it up, you click, like if you open the fib right here, you would click it, right? And then it drags to where the high is, and then you'd mark the high, right where the high is. Let's remove that drawing so we don't get confused. And what that does is it creates channels based on the oldest historical data that there has been, the 12th century or whatever it is. And this is still used. It's like nature's mathematical formula. Trust me when I tell you, you should respect, for the most part, these levels. It's all probability and outcome. But if you look at something like this that wasn't marked on this level, look at how it stayed in this channel. Look at how it stayed here and pop. Look at how it hit it, respected it, came back, hit it, came down. See what I mean? Fibonacci levels, just common sense. Mark them out. They're not hard to mark out. You just always go from the low to the high or the high to the low, always left to right in market. I do a 5-minute, 10-day chart. That is the most commonly used for day trading Fibonacci levels, not swing trading. They'll go to like a day chart, right? Day trading, you need the levels to be somewhere you're going to trade. Now remember, this is marked a ways ago. Look at how that's in that channel. What you're trying to do is you're trying to create channels, and then you're trying to go off the floor up or the ceiling down, or if you're just going long, you go off the floor up. That's what the large cap retracement is and mega cap retracement. You're finding a channel and then you're trading in that channel. And that all started with Day Trading Volume 1. It's called the RV Strategy, and I highly recommend you reading that book. So right here, I didn't end up trading NVIDIA much today, but I did mark some historical data, and this is an historical data level. And what you do is you just open up a price level, and you find a spot where the price action is stopped and turned around, and you double click, boom, boom, and you've made historical data. And look how it respected it again, and look how it respected it again, right? Now, there was no point if the price action wasn't going to go down this far, and I felt today that price action was only going to go up, and so far I've been correct. Hasn't gone a huge amount up, but it is going up. I think it will close higher than it's open because of the news that the the tariff deal at 15%. So I think the overall market is going to go up today, and NVIDIA is a stock that travels. So these are the travels with the market, or maybe even moves the market. But these are the conversations I have every morning before I start trading. I go over my thought process. Charlie, who works, so she helps with the chat, and she puts together news stories that will affect all the large and mega caps that we might be channel trading with the RV strategies. So I touch on those stories, and then I talk about my logic where I'm marking historical data. So historical data can be 1 minute back, it can be 5 years back, right? If you're trading intraday, day trading, you pretty much don't want to go more than maybe 10 days back. You've already got your SMA dailies on the charts, right? On my 1 minute chart, I have the SMA daily. So that's daily moving average of 50, 100, and 200. So I've kind of got those levels. If they come into play, there's going to be marked. But there's no sense in marking historical data back 6 months. If the price action's so far away from it, you'll never see it in the brief amount of time that you're trading, right? So you're looking for something that's in your channel, right? So this is in the stratosphere. The oxygen's thin up here, I like to call it. There's nothing up here. It's not way, way long ago, right? So there's nothing to mark historically. So we're only going to mark below the opening area, right? And then you're thinking, well, if it's long bias, why do I want to waste the time marking stuff down here? Pretty much the Fibonacci levels picked these up anyway, so there was no point. I mean, maybe this one. The black areas are the open sessions. I mean, maybe this one would have been, but look, it picked it up. Yeah, that's just a continuation. So it respected it and respected it and respected it. That is a great historical data level. So you're looking to mark a level that may hit again while you're trading. It's just that simple. You're looking to mark that level. It may not work. As the book says, as many books say, you just respect them until you don't. The second it breaks that continually, just like breaks it, trends right by it, like that level meant nothing. Take it off your screen. It means nothing. It's not a guarantee, right? But a lot of times, I don't want to say most times, a lot of times it is respected. And that extra edge, guys, with the indicators and the skill you develop to see the movement on the level too, that's the edge you're looking for that's going to get you green every single day for the most part. So historical data marked out. Let's take a look at another one. I'm about to break into how we did today. You can see on this stock was $104. I'll go over those trades. And then if we get to say, I came back, guys, for those of you that watch, and I traded with Charlie. So let's go to AMD. I think AMD, we did $49. So let's look at how stored. Now today was a little more difficult to trade because it was trending up. So I marked a level and it just blew right out. There's nothing to mark up here. So when you see these levels here now, these were intraday. As I was trading, I was trying to find anything not as highly respected. I wasn't going to respect these much, but I put them there for a little bit of guidance while we were trading in the moment. And then the other things you're looking for here, like the candlestick pattern playbook, is the only book still, and I have a link to it, is the best pattern book there is, no matter what you see. It is the best pattern book. Not only does it have depictions of every pattern, drawings of every pattern, it has a rating system. It's the only book that rates the accuracy. It would have told you that this is a tweezer move. And this, I believe it's an 80%, maybe a 72%. Bull flag's an 82%. But this tells you that this is a very accurate pattern when it comes up and it tweezes like that. And it says that when it tweezes like that, you typically want to expect the movement of the inside of the tweezer to go down. So if you take a look at that, 174, like 40 all the way down to 173.66, so a little less than $1 from the time this closed. So this closed the end of the tweezer. Now you should expect this to go down a little bit less than $1, 73.39 down to 72.32. So there it is. It did its exact move before it turned around, and it's doing it again here, right? There's another tweezer move, right? So it told you again, look at this candle, look where it closed. It actually went further. That's just one pattern. That's an inverted hammer. That's a reversal sign. This is a rickshaw man or a doji that's also telling you at the end of that move, it's going to go the other way. So you don't want just support and resistance lines. You don't want just indicators. You want to learn your patterns too. This is the edge, guys. Why the 5% make money, make millions. There are many traders making 20 million a year. That's not just a number I'm throwing out there. That's verified numbers from other trading prop firms. So, but don't expect to make $20 million. But I'm saying, how do they do it? Well, they're reading price action. Level 2, which I haven't talked about yet, they're reading historical data. They're reading candlestick patterns. All these things. Now, a lot of them, they'll trade off channels and some of them don't. Just everybody has their own little shtick that they do. Here's another tweezer move telling you it's going to go up, and it did. Here's a doji or rickshaw man saying, hey, it's going to go back down. It's just like clockwork. You can literally, more times than not, I'll give it that. I won't say always, but I'll say more times than not, you can respect the patterns once you learn them. There's another book that came out after the Candlestick Pattern Playbook, and it's called Day Trading Volume 3, and it's the 66 Candles Mastery or something. It shows an old Japanese guy on the cover. And that one is just puzzles and games that help you learn these patterns. So I don't mention this enough, so I wanted to make sure I brought it up, that the patterns are so important. But when we marked out AMD this morning, it wasn't up here. So I did the same thing. I marked the Fibonacci levels, left to right, high to low, made some channels. I didn't really have much. You can see I marked this level because it hit here, then it hit here, then it hit here. And I thought, hey, at the open, if it just happens to go down, we might want to buy off that dip, right? But it didn't. It just took off. So that one we made money on, but it didn't really give us what we wanted in the channel. They were just taking off. So let's go to Tesla. Now this one I came back in, guys, that were watching. I traded this with Charlie so she could get to her goal. Now this is not one I normally recommend trading, but it actually had a catalyst. So you don't want to trade, if you're trading a large cap retracement, you don't really want to trade on news or a catalyst or earnings or something that might make it go a certain direction. It's great to travel in a certain direction if you know the stock's going to go that way. If you know the stock's going to go that way, then go with it, right? But how do you really know, right? You're always chasing it. If you get green in the beginning, then you can hold it and just say, look, if it goes back, if it retraces this bar,